Thomas, thank you very much for joining us here on CNBC. Let me start by asking you if you could just give us your thoughts on the earnings as you've reported them for this quarter and for full year 2020. Obviously, there are some troubling numbers in there in terms of the wealth management business and some of the extra provisioning you're having to make here. But how do you feel about the quarter and the year as a whole?
Thank you, Jeff, for having me. Overall, I'm very satisfied with the 2020 results. If you look at our underlying results, we are up 6% in an environment where we had very high credit provisions like the whole industry, where we had strong FX headwinds with the strong Swiss francs. So I'm very happy with that. I'm very happy with the investment banking results. You're absolutely right. In the fourth quarter, we did have to book some one-offs. One was relating to our impairment in York. The other one's relating to legal provisions in the context of our RMBS cases. Both of these originated in the 2009-2010 area. So we have been dealing with historic items, which was important to me in my first year. We also, in the summer, announced 4 very important strategic initiatives to put together the investment bank, to create SRI, Sustainability Research and Investment Solution. We integrated Neue Aargauer Bank here in Switzerland and launched a new suite of online banking and digital banking offerings. And finally, we combined risk and compliance. So we achieved a lot in 2020. And we really see 21 now, the year where we can look forward to growth. We had an excellent start to the year. The January results are the highest in a decade. All 5 divisions are up, so we are very happy with how things are going.
Thomas, just let's start with the additional provisioning you've made here, particularly for the mortgage-related liabilities. Are we at a position yet where we can definitively say that is the end of additional provisioning? There will be no need now to further set aside money to deal with these legacy fines?
Well, never say never, but I feel very good that we have achieved a few very important milestones in that area. But, I'm not a lawyer, so you always have to see how things develop. But I'm very confident that we have put a lot of this topic behind us.
Thomas, the Federal Reserve back in December did raise some questions about your anti-laundering policies and whether they needed strengthening in the United States. I know the bank pushed back against that, but are you clear here that the systems are all operating appropriately within the bank, not only in the US, but also around the world?
Well, this is something that we have been working with the Fed for several years, and we are making good progress and working very collaboratively with the Fed. So we are fully aligned with them. These are things that we have to work through. But again, it's something that goes back a couple of years, but we are definitely moving in the right direction.
When you look at the provisioning that you've made, there has also been an increase in provisioning related to non-performing loans. Can I ask you, to what extent do you think that is going to be an issue this year? We've actually seen better performance in this line from a number of banks through the reporting period. What is your expectation on the non-performing or impaired loan book?
Well, we have taken a normal, prudent approach to the fourth quarter NPL because we're not out of this pandemic and the related economic fallout. But we feel much better about this now into 21. Directionally, we would expect our general credit provisions, so-called CECL, to reduce in 21. Specific credit provisions are still at an elevated level, I would say, compared to the 10-year average. But directionally, overall, we definitely expect credit provisions to be lower in 21 compared to 20.
Thomas, when you came in, you put a stake in the ground on costs, and you said this is an area where we are going to push back on rising expenses, and you've made some significant restructuring announcements to reduce or save money effectively on the bank's operations. But as I look at the reported earnings, the total operating expenses were up 2% for the full year. They were up 7% across the fourth quarter of 2020. Is this worrisome, or do you think manageable?
Not at all. We are growing, and when you grow, also costs go up. I was always somebody who said, I don't believe in absolute cost targets. I believe in addressing structural efficiency potential, and that's what we did in the summer when we announced our 4 initiatives. But I don't believe in tightening the belt forever. So I believe in cost-income ratios, managing cost-income ratios, especially on the 3 private banking division side. And I'm actually very happy how we have addressed these structural opportunities, be it in Switzerland with the integration of NAB, be it combining risk and compliance, combining the 2 investment banks. So there are some very obvious structural initiatives we took, which will, in the short term, in 2020, will have resulted in some increase in restructuring costs, but we will benefit from that in 2021 and 22, and that will allow us to actually self-finance investments, be it in China, in Asia, be it in technology, be it in ESG, be it in hiring new relationship managers elsewhere, investing in M&A. So I feel very good about our cost control, and from that perspective, we are moving in the right direction.
And can I ask you specifically about the wealth management business? As we look at the reported line here for full year, net revenue was down 24%. Revenue was down for the fourth quarter as well here. This particular segment has been quite challenging, particularly when it comes to making sure that reoccurring commissions stay strong. Do you think you're in the right place on this business, or is there further work to be done here, and what would that work require?
Yeah, you obviously have to take out the one-offs, and if you take out the one-offs, the numbers are much better. And if you look actually in dollars, which is probably the way one should also look at it, and we are actually up 5% on a constant currency basis in terms of revenues. Our client business volume, which is the total of assets under management, assets under custody, and lending volume, is growing nicely. So our underlying businesses are doing very well, particularly in Asia, where we have very strong growth. So one of the issues obviously we have as a Swiss franc reporter is that the dollar weakened by 11% in 1 year, and we have only 25% of our revenue in Swiss francs. So we are obviously, as a Swiss franc reporter, somewhat disadvantaged in that sense, and that's why we are also showing the dollar numbers. And there you can see in constant currency terms, our business is growing very nicely, actually.
Obviously, the investment bank has done well on this heightened capital market activity, but I have a couple of questions for you. One is there a cliff edge in this activity once we begin to see perhaps a tapering of interest rates or a tightening by central banks? And the second one is you're getting quite heavily involved in the SPACs business. Again, there's still some regulatory interest in this particular financial engineering. Do you think that you're engaging in potential risks as there is this gold rush taking place to get involved in SPAC activity?
Yeah, I will get back to the SPAC question in a second, but in our overall investment bank, we've had very good growth. Our pre-tax income is up 70%. We are not that exposed to the macro business as maybe some others, but if I look at our totality of our business, not only I think we did very well in 2020, but we are also well positioned for 21 as some of the areas like capital markets, like some of the credit businesses, which were maybe not that strong compared to macro in 2020, are picking up. So from that perspective, I think we are very well positioned. And still our overall revenues were up 19% and in dollar terms, and that excludes some of our other investment banking activities we have in other areas. So if you include that, we broadly grew almost like the market in investment banking. SPAC business has been a very strong business overall in the market in 2020 and continues actually even stronger now in Asia and Europe. So it was led by the US, but we see a lot of activity. We had a very good year in 2020. 21 has now seen some other of our competitors. I think we are number 4, number 5 right now, but it's a clear alternative to traditional IPOs. It's an alternative to private equity. It's good to have SPAC as an alternative, I think, and it opens opportunities for entrepreneurs. It opens opportunities for investors to participate in a different manner. So clearly, this is very important that the compliance and due diligence efforts are sound. But I feel very comfortable about how we have been doing this business, and from that perspective, I think there is more opportunities ahead of us, and we'll have to see how 2021 will continue in overall capital markets, where I do think not only in equity capital markets but also debt capital markets and high yield, we will see heightened activity, and we saw that already in the first 6 weeks of the year.
Are you concerned about a pullback in risk assets in the very short term?
No, not really. I mean, our house view continues to be constructive on equities, given the overall interest rate environment, given the expected recovery. Clearly, some of the valuations look very high, but there are also certain sectors that are still somewhat, I would say, should still offer some potential for upside, especially some cyclicals, some high dividend stocks that may be underperformed sectors like technology or healthcare in 2020. So overall, we continue to be constructive about the equity markets in 2021.
Inquiries into SPACs, just to return to that for a second, seem to have been largely focused on the remuneration structure, particularly for the sponsors. Do you think that needs a closer look at this point?
Well, I think we have to always look at things and see how things can be improved, but there's not much more I can say to that.
Is there going to be a boom in Europe of SPAC activity, or are the markets different compared to the United States, perhaps a little less open and a bit more highly regulated?
Well, one of the issues in Euroland and also in Switzerland is negative interest rates, and that doesn't help the SPAC business because obviously at the beginning it's cash, and but we do see definitely a pickup in interest in Europe and in SPACs, and we'll see more in 21 than we saw in 20. But there are some structural disadvantages compared to the US dollar because of the negative rates. We see a lot of activity in Asia around SPACs, so I think actually Asia will be more active than Europe.
And Thomas, just a final question really on image and reputational risk here. As it's been reported, you tried to block the appointment of the auditor, Thomas Verlin, when it comes to this ongoing FINMA investigation into the spying saga. Can you confirm that that is the case, and how does that help your cause when ultimately we all want to see just an open and honest inquiry into what actually happened, and then we can draw a line underneath it?
Well, look, I don't want to further comment on that. We had a different view about independence and conflicts, which we took to the court. It's our legal right. We accept the verdict. We cooperated 100% with the monitor and with FINMA on that while we were questioning the independence and objectivity, but we accept that. So, but we fully cooperated during that time and are cooperating with FINMA.
And do you think the arrival of a new chairman will help with that process? Is Urs connected in some way to that past case?
Look, I don't want to comment further on that. I think we are cooperating, and that's another topic I want to put behind me, and I feel comfortable that we will put it behind us.